Hey, what's going on, viewers? My name is Chris, and in this video, I'm going to share with you what ChatGPT thinks are the 6 most important things for day trading the futures market. Now, this could apply to day trading in general and trading in general. Let's be fair, okay? So basically, I wanted to know if ChatGPT knew a thing or two about trading. As an experienced trader, I've been trading since 2018. I have a few battle scars when it comes to day trading. So I guess I'm able to sort of check out what it's telling me to make sure it's relatively good information. So what we're going to see in this video is me basically reacting to these points that ChatGPT told me. And I think this is going to be a very interesting episode for experienced guys as well as new traders. So stay tuned and remember to press the like and subscribe if you enjoyed this content because it really helps the channel out, okay? So let's get to it. So I started off like this. I went up to ChatGPT, and guys, if you don't know what ChatGPT is, it's this AI tool, and it's been all over the internet, and it's just really popular. It's a great problem-solving tool, and it can help you learn how to code way faster than pretty much anything else. So I asked ChatGPT first, have you ever traded futures on the Chicago Board of Trade? And it responded with a no. It told me, I'm a language model, and I've never traded a futures contract before. Okay, fine. Then I asked it, if you were to trade the futures market, what would be the most important things to watch out for? Now, one thing I want to say is when you ask ChatGPT stuff, you have to carefully structure your sentences. Make sure you're being precise about what it is that you're asking it. If you ask it very vague questions, it's going to generally give you probably vague answers. If you ask it more precise questions, it can give you some pretty interesting answers. So try it out next time you use it. So this is what it gave me, guys. And what we're going to do is go through each point 1 through 6. And by that time, it's going to get really hot. So you might see me start to get naked, but we'll check it out. At the end of the video, there's a bonus point which I wanted to add, which is something that ChatGPT did not include, but I thought it was relevant given what it did tell me. So this is what it is. So it told me this. There are several factors that can contribute to the success of day trading in the futures market. Some key considerations include, number 1, having a solid understanding of the market and the specific futures contract you are trading, including the underlying asset, the expiration date, and the trading hours. Now let's unpack that for a minute here. The specific futures contract you are trading, that resonates with me a lot. I'll tell you why. Because a lot of traders I know who've achieved some degree of consistency, a lot of them stick to the same markets over and over again. And also myself, I found myself sticking to the same market because it allows me to kind of get used to a schedule and used to a certain price action and a certain market that I'm used to trading. And also risk tolerance, because each market when it comes to futures contracts has a different tick value, meaning that you make or lose a certain amount based on what the fixed tick value is. So for example, for 5-year US Treasuries, each tick is worth $7.81 in US dollars. For S&P 500 futures, it's $12.50. So what it said is having a deep understanding about the specific futures contract you're trading. So it's basically saying you should consider getting to know one market or a couple of markets, including its underlying asset, meaning what are the underlying assets that the futures contract represents. Next thing is it talks about the expiration date. What that can represent is understanding where the contract is trading relative to its expiration date. Are we close to the rollover period, which is the period where institutions generally have to roll over positions from one futures contract to the next? And during this period, the price action of the market and the market behavior tends to change drastically. So that's something to be aware of. And that's interesting that ChatGPT mentioned that because that's something that's pretty advanced. And then the last thing it said, the trading hours, which is of course something important. You want to know generally around what time is the official open and the official close of your market, as well as when the volatility tends to occur. That's pretty accurate. So far, guys, point number 1, I'm on board with what ChatGPT is saying. Let's go on to point number 2 now. And it says this: developing a trading strategy and sticking to it. This can include identifying key levels of support and resistance, using technical indicators, and setting stop loss and profit-taking orders. All right, let's unpack that. Developing a trading strategy and sticking to it. Okay, so I agree with this to a certain extent, but I want to give you the opposite scenario of this. When it comes to understanding your market, understanding your strategy, it's very important that you spend time developing a strategy. So I very much agree with developing a trading strategy, but sticking to it is where you can get into a bit of a gray zone because, as you guys know, the markets go through cycles. They're not always the same. You get periods where the market is very giving, And then you might get multiple days where there's just nothing going on and it becomes a taking market. And if you stick around during that environment, you're more likely than not to just give back money to the market and just give your money to the market, basically. So when it comes to sticking to your strategy, you also have to understand when to sort of step away, when to press the gas, when to press the brakes, and when to essentially make adjustments. And that's why I think it's important as a day trader, swing trader, whatever type of trading you're doing, to have multiple tricks in your bag, not just be a one-trick pony. Now, if you are a one-trick pony, you're going to end up trading a lot less. And that's just simply how it goes. That's kind of what I've experienced. My lifestyle and everything right now only pretty much allows me, I've made the decision to trade only about 2 hours a day in the morning, and that's it. The next thing it talked about was identifying levels of support and resistance. Now, this is interesting. I agree with this because this relates to the market context. It's basically saying keeping track of the market context. Where are your areas of demand and supply? Where are traders positioning, etc.? So it's hinting at understanding market context. The next thing it talks about using technical indicators. Using technical indicators is definitely a given because what they're essentially doing is they're performing calculations for you that you would normally be doing by hand, but they're doing them much faster. So I think in trading electronic markets like today, it's important to be taking advantage of the tools that we have at our disposal. A lot of them are technical indicators that can calculate stuff much faster than a human can. All right. And then it talks about setting stop loss and profit taking orders. Now I'm going to go over this one because it does give a point about risk management a little bit later on. Let's go on to point number 3 right here, which is staying up to date with news and economic events that may impact the market and being able to react quickly to any changes. That's pretty big right there, guys. So it literally said you need to stay up to date with news and economic events. For my trading personally, this is a huge one because if you're trading US Treasuries, you guys know that they tend to move a lot on economic data early in the morning sometimes and on these bond auctions in the afternoon. But the main thing is on the economic data early in the morning. So ChatGPT knows about economic data announcements. That's interesting. And then the last thing it said in point number 3 was being able to react quickly to any changes. So it's talking about being fast. ChatGPT seems to think being fast has an advantage in trading. And I do agree with that, I must say. All right, guys, it's getting a little hot in here. I'm going to take this off right now. Unfortunately, you guys are going to see some serious gains coming through because we're getting shacked. All right, chill. Chill out, bro. Chill out, bro. Just chill, bro. Okay. Point number 4. Let's see if it knows what it's talking about. Managing risk effectively by setting appropriate position sizes and using stop loss orders to potentially limit losses. I'll tell you why I agree with that. Because trading is pretty much a game of risk management. It's all about that. Setting appropriate position sizes. Let's stop there. It's important in your trading, in your unique trading, based on how often you trade and how many hours a day you trade and what trading days and what trading times you're prioritizing. I'll give you an example. This week, we have economic data Thursday, Friday. Today is a Wednesday, I'm filming this, okay? I'm generally prioritizing trading on the Thursday and the Friday because I know that during that time there will be more opportunity. So when it comes to allocating risk, my risk capital, I'm making sure to allocate more risk for the Thursday and the Friday and allocate less risk on the other days. So you guys get where I'm coming from? So when it talks about setting appropriate position sizes, I very much do agree with this. You want to be managing your money. You want to be focusing on when you're deploying that risk capital and when you're going into capital preservation mode. And then it says using stop loss orders to limit potential losses. If you read this and you're a new trader and you're face blank just looking at that, you're not going to understand how important this is. It takes someone like me or someone more experienced to say, you need to stop right there and reread that again, using stop loss orders to limit potential losses, guys. In a game of risk activity, you have to be thinking more about money management than the actual profits you're going to be making from these trades, guys. And again, your risk tolerance depends on your financial situation and all of that. We're going to get to that. That's actually going to be part of the bonus point. So stick around for the bonus point number 7. You do not want to miss that. When I first started trading, I did not know how important using stop loss orders are. I learned it the hard way many times okay? Getting stuck in trades where you're in the situation where you're looking at your screen, the trade's going against you, and you have no clue what to do, or you're basically at the discretion of the market. That is the 100% the worst scenario to be in trading. You never want to be at the discretion of the market unless you planned it from the start that you enter the trade and you're going to let it either hit your stop or your target, and you just leave it until it plays out. But in other types of scenarios where, let's say, you didn't have a stop, or a stop order was rejected and you're now in a situation that you were not planned to be in, you have to take action in those types of situations. You cannot just sit there, okay? So thank you, ChatGPT, for mentioning stop loss orders. Let's go on to point number 5, guys. This is a huge one, and I was really surprised to see this. Point number 5, keeping a trading journal to track your performance. Identify any areas of improvement and refine your strategy over time. All right. So I did end up asking ChatGPT after this, maybe about a day or two after. I asked it the same question, and I wanted to see if it would generate similar results or even better results. And I'll be honest with you, the first time I asked it, it would give me the best results, and it was this one. As soon as it mentioned journaling, I was like, whoa, this thing is insane. So keeping a trading journal to track your performance. Identify any areas of improvement. Well, look, how do you know if you're getting better? How do you know where you're making money? How do you know which trades are paying you? How do you know around what time of the day you're generally trading your best? Again, so many different factors can come into play depending on your unique trading style, your strategies that you're employing, the markets that you're trading, and basically all the variables that go into it, okay? So if you're not really keeping track of any of it, you don't know where you're doing well and where you're not doing well. Honestly, this is one of the most important factors in any performance competitive environment. If there are people competing for a similar result, you have to be keeping track of your results in some way. Whatever trading journal you use, make sure it's able to give you very precise information about the unique variables that are important to your trading strategy. And as you develop as a trader, you're going to go more in depth with certain variables that are relevant to certain strategies that you use. All right. Repeat that part of the video if you need to. Okay. And then the last point, let's go on to point number 6, maintaining discipline and emotional control, staying focused and avoiding impulsive decisions. Wow, guys, this is what it's all about right there. What discipline is, basically, guys, it's being able to show up on days where you don't feel like showing up and where you don't feel like doing the work. When things are the hardest, you're having a bad day or a bad week, or you're just tired and you don't feel like showing up, but you have to. Doing the trader work when you don't feel like it is discipline. You know, sitting there when you're sitting green on a trading day, let's say you had a couple of nice trades, sitting there for another hour after that, because you know the market is likely to continue being volatile, that's also discipline. Even though you may have made your biggest trade ever, it still requires the discipline to sit there for that extra hour, because you can turn a good day into a really great day, especially on days where you're green to start. Here's another example of discipline. On a day where your P&L is sort of back and forth, that discipline to be able to sit there calmly and understand that potentially there's an economic data in a few minutes that you're waiting for, or maybe you have to wait for another 30 minutes for a setup to play out that you've been tracking for a few days. All of that patience that's required for trading, and that ability to sit there and wait for the trade and then execute it flawlessly, that is all part of the discipline factor of trading. Emotional control is the next thing it mentioned. This is huge. Again, I'm no expert on this, but one thing I learned from my trader buddy Fat Cat, who has a great YouTube channel, he's hilarious and super fun to watch, by the way, is that meditation and emotional awareness is one of the most important things that you can try to employ in your trading routine. You will never be able to fully escape emotions because they're a part of you as a human being. Potentially you have 1, 2, 3, 4 trades. After those 4 trades, you're not the same as you were before you took them. So as you trade and as you experience these things, you're going to be experiencing emotions that go along with those experiences. So it's important to train yourself to maintain a degree of awareness of these emotions as they are happening. And you don't necessarily have to do anything about them. You just simply have to be aware of them, because when you're holding a degree of awareness for the emotions, at this point you're able to step back and almost see yourself outside of your own body and experience the emotion, from an outside perspective and say, okay, I am feeling frustrated right now, and I know exactly why. It's because this trade I was trying to execute it took me 2 tries, and it's getting me a bit frustrated, and I don't know what's going to happen now. Is it going to play out or is it not? Is it going to take a third try, or am I going to be stopped out? If I'm stopped out, then I'm going to be down X amount on the day, whatever. All of these thoughts that go along with your trading process, you need to be able to kind of go through them one at a time in order to maintain that degree of awareness. You can't just let things boggle up and then make a decision out of nowhere, okay? At least I can't. So what I like to do, for me, an exercise I like to do is before I trade, I start vocalizing stuff regarding the context. So if I'm looking for a particular trade, I'm saying, okay, we're above this daily level on the 2-year, the 5-year is coming up to this level. I'm spitting out the factors of confluence that are associated with my trade in that moment. So I'm saying this trade has 2 factors going for it and this factor, but then I'm a little concerned about this. So what I might end up doing sometimes is I'll put on the trade and then I'll continue to monitor those factors if they continue to stay relevant. And then at that point, I can choose if I want to be allocating even more risk to the trade or potentially getting out of the trade and setting up to re-enter it if it's still valid. And then the last thing in point number 6 it says is staying focused and avoiding impulsive decisions. So this does tie into emotional control. And as a human being, I believe that we have limited periods where we can focus for fixed amounts of time, like really high level focus. Personally, I trade only about 2 hours maximum during the day. And if you monitor your own ability to stay focused during the day, you will notice most probably that you can focus for a certain amount of time very well, and then after that you'll probably notice your performance in focusing will decline. At least they do for me. And then it mentioned avoiding impulsive decisions. The whole process of it is really about avoiding impulsive decisions. It's about making calculated decisions more than anything. Definitely your discipline and your emotional awareness factors and your knowledge about your methods and your strategies and the reasons for why you're doing certain things, all of this is generally there to help you avoid making impulsive decisions and make the decisions that you're there to make to execute the trades that you planned. And then the last thing it said, by the way, if you're enjoying this video, guys, remember to press the like button and leave a comment or something. The last thing ChatGPT said is this in this message. It says, it is important to note that day trading futures markets is considered as high risk activity, and it's important to understand the risks involved and have a proper trading plan and risk management in place. I do agree with that point. It mentioned risk twice in that statement. Understanding the risks involved and having a proper trading plan that you understand on a very high level and proper risk management in place. So in other videos, I talk about risk tolerance and how everybody has sort of a unique risk tolerance and a risk level. And that's kind of what I want to go into in point number 7, which is a bonus point that I wanted to add to this right here, guys. Point number 7 is my point, and it's basically this, guys. It's that every single trader out there, and I know most of you guys are between the ages of 20 and, I don't know, 40 or 50, because I look at my analytics. I'll post them there so you guys can see. But it's mostly, young men that watch my channel and trading related content. My opinion, point number 7, is that you need to stop comparing yourself to other traders' results. Because other traders are in completely different boats than you. They have a completely different financial situation than you. They are completely in a different age group than you, some of them are. And that is why it is important to not compare yourself to other traders. And if you do compare yourself to other traders, you must understand those factors that go into their unique financial situation. So if you just look at a trader and say, look, he made X amount on a trade, or a trader posts a video and says, look at me, I made X amount on the trade. When you see that flat out, most new traders are, blown away by that. They're like, what the heck? How do I make that money? I want to learn how to trade because I want to learn how to make that kind of money. But they're not seeing all the little things that go into that. They don't understand any of the nuances that go into that. So, quick example. Men in their 20s versus men in their 30s. Big difference in my opinion, guys. Financially, when it comes to your overall life experience, your ability to take and perceive risks is drastically different for a man in his 20s to a man in his 30s, guys. So you can look at some traders, let's say guys in their 30s, they're more seasoned, they have more experience handling larger amounts of money, they have more experience in life, and that generally allows them to make decisions under more pressure potentially and take larger risks. Whereas if you look at a man in their 20s, like me potentially, I'm still in my late 20s, my financial situation and my unique situation does not really permit me, or this is a decision that I've made, is that I do not allocate a significant amount of my capital to day trading. And this could be for a number of reasons, including my financial situation or basically where I want to be playing my cards. Life is kind of like a game of chess, and you need to understand for your unique situation, you need to start thinking about where is the next best move for you. For some of you, it might be putting more focus and allocating more risk into your day trading. And for other traders, maybe day trading doesn't fit with your overall lifestyle. Maybe you need to shift over to more of a swing trading approach, and maybe you have some other opportunity out there, some other financial opportunity that's presented to you where you might need to allocate some risk capital to that. So the whole point that I'm trying to make is that comparing yourself to other traders is not something productive unless you're able to understand exactly the things behind the decisions and the experience that that trader has. All right, guys, I hope you enjoyed the video. Thanks for watching. YouTube's going to recommend you a video right here. Be sure to click into that. And there's going to be a playlist down here that you can check out that's going to have lots of other trading videos, and I think you'll like them. So check it out. Thank you for watching.